Apple isn't the company it used to be. Apple barely managed to grow revenue over the past few years. Meta Platforms and Alphabet are both cheaper and growing faster. Nvidia's growth makes it a prime pick over Apple. Let's dive in. Should you forget Apple and buy these 3 tech stocks instead? Welcome to Timely Investment Research. Right now, Apple is the world's largest company by market cap. However, investors need to be aware of some problems under the hood. Instead of Apple, I think there are much better buys right now, including Nvidia, Alphabet, and Meta Platforms. These 3 provide significant long-term upside that should allow them to outperform Apple. What's going on with Apple? Apple reached the top of the rankings of the world's largest companies with shockingly low revenue growth. Sales of iPhones haven't increased meaningfully since the pandemic began, and investors put a lot of hope into the iPhone 16 being the generation that turns it around, mainly because of its Apple Intelligence integration. But the latest reports say that its sales are below expectations, which could spell disaster for the stock. It trades at 34 times trailing earnings and 31 times forward earnings. That's a premium investors would expect to pay for a company that's growing rapidly. In Apple's latest quarter, however, sales only grew by 4.9% and earnings per share by 10.2%. Those aren't figures that support the stock's lofty valuation. The immediate future looks slightly better, but not enough to justify today's price. In fiscal 2025, ending September 30, 2025, Wall Street expects 8% higher revenue and 17% earnings per share growth. Compared to the following 3 options, Apple stock doesn't look attractive. These tech stocks look to outperform Apple over the next few years. Instead, I would urge you to consider Nvidia, Alphabet, and Meta Platforms, and many other companies as well. Let's start with Nvidia. Its graphics processing units are powering artificial intelligence, and demand doesn't seem to be slowing down anytime soon. Alphabet is Google's parent company, and its market dominance among search engines allowed it to capitalize on advertising in one of the most lucrative areas on the internet. Meta Platforms is the parent of social media sites like Facebook and Instagram, and it also generates a lot of its money from ads on its platforms. All 3 of these companies are far outperforming Apple in revenue and earnings per share growth. Despite doing substantially better than Apple, 2 of them don't hold a premium in comparison to it, while Nvidia isn't that much more expensive. As an investor, I'm looking for companies with sustainable business models, faster growth, and lower stock valuations. Compared to Apple, both Meta and Alphabet achieve that, so buying those 2 instead makes a lot of sense. Nvidia isn't cheaper now, but its prospects are far more lucrative. While its days of increasing revenue at a triple-digit pace are over, if it keeps up its current rate, it will still post impressive growth. In its 2025 second quarter, ending July 28, Nvidia grew revenue 15% sequentially, and its third-quarter projections indicate sales will rise another 8.3% over the previous period. Apple can't muster this kind of increase year over year, yet Nvidia is doing it one quarter after another. If the stock price doesn't move, this will rapidly drive down Nvidia's valuation. However, with AI being such a hot investment topic, the stock will continue to be strong and will likely maintain its premium over other tech stocks. As a result, its stock performance will be closely tied to its revenue and earnings per share growth, which will easily allow it to outperform the iPhone maker. Apple is a great company, but it isn't the juggernaut it used to be. Investors should start looking for other investment opportunities. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.